In terms of support resistance, I encourage you to look at stock forecast toolbox, right? I think this is a really good model, basically saying, you know, we're actually model turned positive. It was neutral, now turning positive, basically saying, you know, 390, this is it, right? 390, this is it. And we might retest 410, right? As we are approaching next earnings season, right? We've had 2 weeks in a row where we're trading, we made new highs. We'll see where we're going to close today, but 390, 380 are important supports, right? Obviously, as long as the 2-year yield moves 5%, right? We were down as much as 6% this morning, right? When the credit default swaps on Deutsche Bank has kind of increased exponentially, but market has been resilient, right? Deutsche Bank is on the verge of bankruptcy, one of the largest banks, and you know, QQQ is down only 0.5%. So you have to give it to bulls. They're very resilient, right? One explanation is seasonality, right? It's just a good time of the year, and spring is in the air. We're still optimistic that the earnings season that starts, in a couple of weeks is going to be positive, right? So that's the soft landing state, soft landing camp, very resilient. And model basically shows that, assuming the Deutsche Bank is not going to default, right? If they're going to default over the weekend, then obviously model is going to be wrong. But assuming you don't have new banks defaulting over the weekend, the best of least resistance is to potentially continue going higher, right? This point, I don't think we're going to break the downtrend, right? We've attempted it this week, got very close. We might get next week close again. I mean, I guess potentially we can get year-to-date high. We can retest this, right? But I still think it's going to be kind of a triple or quadruple top. Right? It could be a little bit lower, could be a little bit high. I think it's going to be a little bit lower, right? Because the earnings is, everybody's going to shift their focus into the earnings, which basically next week I'm out. So there's 2 to 3 weeks left, 3 weeks left till the next earnings cycle. Not a lot of time to make a lot of damage. So short-term 390 is your support, right? If you're day trading, and overhead resistance at this point is last few weeks low, right? Which is around, 402, 407. So that's your resistance number one. Right, and this is 390 is your support number one for day trading. Bigger support is last week low, 380. Right, it's very important for the bulls to hold on to last week low, which also corresponds to the December low. Right, this is the last support. The next support is, 52-week low. And I don't think it's going to hold, right? I mean, we might get a couple bounces, but at this point, if this level doesn't hold, which is not that far, 375, 380, then it immediately opens up the doors for 350, which may or may not hold, and most likely will not hold. So you could be a bull or you could be a bear. That's fine. I would watch this support, right? And then it's all about risk management, right? Risk management. Whether you're bull or bear, you could be bullish, right? Some of the positions could be bullish, some of the position could be bearish. I would watch 380 level, right? I mean, 375 is December lows, something along those lines. But this is your support, right? This is your support where you do not want to see market drop below this level. And same thing with 2-year yield, right? As long as the 2-year yield is below 4%, right? Kind of the magic line in the sand. As long as we're below 4%. At any given point, we might retest this level, right? It could happen by end of today. It could happen sometime next week, but the treasury market has to get more stable because treasury market is more volatile than the equity market, right? That's a problem. That's a problem. So that's a possibility, but I still think high chance we get to 400, 410, and then as next earnings season unfolds. Right, earnings season is going to be either better than expected, where you don't see issues, right, with the current credit environment, and then the market stays kind of sideways, going into the summer. But when banks announce earnings in April, right, April 15, it would be very important to see what the forward-looking statement, right? On one hand, JP Morgan can say, listen, our deposits has billions of dollars has been transferred to JP Morgan from all the regional banks, right? And that could create a rally in the bank stocks. Or they can say, listen, despite increase in deposits, the cost of insurance, cost of lending is going to significantly, decrease our revenue going forward, and then the banks will sell off, right? So the news in April and the reaction to this news will actually determine, when are we going to retest 52-week low, right? Is this going to be April, May, right? Or is this going to be May, June, July, right? Something like that. That is not known. We're not going to know this until the earnings season, assuming there's no other, black swan events.